Welcome to my channel. Today, we're diving into the fascinating world of the stock market, exploring its origins, its early mechanisms, key fundamentals, and how it has evolved into the financial powerhouse we know today. It's a system that has built empires, driven revolutions, and transformed the way wealth is created and distributed. To understand the stock market, let's go back in time. Long before electronic trading, algorithms, and ticker symbols, the roots of the stock market were planted in the bustling marketplaces of medieval Europe. These were vibrant hubs where traders gathered to exchange goods, currencies, and even debts. Over time, these informal systems became more structured, setting the stage for a revolutionary financial innovation. Cities like Venice, Bruges, and Antwerp played pivotal roles in these early financial practices, developing instruments such as bills of exchange to settle debts over long distances. The pivotal moment in the history of the stock market came in 1602, with the creation of the Dutch East India Company, or VOC. This groundbreaking entity wasn't just a trading company, it was the world's first publicly traded corporation. The VOC sought to fund its ambitious global expeditions by selling shares to the public, offering investors an opportunity to earn a portion of the company's profits. Certificates representing ownership were issued, marking the first steps toward a formalized trading system. The VOC's success inspired other joint stock companies, spreading this innovative model across Europe. In 1611, the Amsterdam Stock Exchange was established to facilitate the trading of VOC shares. It became the world's first official stock exchange, creating a system remarkably similar to today's markets. Investors could buy and sell shares, speculate on their value, and even engage in early forms of options trading. The exchange itself was housed in a simple, unadorned building where merchants negotiated. This system offered liquidity and a way to calculate risk more effectively, making it revolutionary for its time. But how did it work in those early days? Trading was conducted face-to-face, often in designated areas such as coffee houses or town squares. Prices were determined by supply and demand, just as they are today. Investors relied heavily on word of mouth and personal networks to gather information, as there was no centralized system to disseminate financial data. Across the Atlantic, the foundations for another significant financial institution were being laid. In 1792, 24 merchants and brokers gathered under a buttonwood tree on Wall Street in New York City. Their agreement, known as the Buttonwood Agreement, formalized the buying and selling of securities and marked the birth of what would become the New York Stock Exchange, or NYSE. This agreement, though brief and just 2 sentences long, introduced key principles of transparency and fairness, establishing a regulated environment where trades could be conducted efficiently. The Buttonwood Agreement laid the foundation for the financial powerhouse we know today as Wall Street. Initially, trading was limited to a few securities, including government bonds, but it quickly expanded to include shares of emerging companies, reflecting the rapid industrial growth of the United States. By the mid-19th century, the NYSE had become the financial hub of America, enabling companies to raise unprecedented amounts of capital. Over time, the NYSE became a hub for economic activity, connecting investors with companies seeking capital. This dynamic interplay fueled the growth of iconic businesses like General Electric, Ford, and IBM, transforming the stock market into a vital component of modern capitalism. Now, let's dive into the fundamentals of how the stock market operates. At its core, the market is driven by the principles of supply and demand. Companies issue stocks to raise capital for expansion, research, or other ventures. Investors purchase these stocks, hoping to earn returns through dividends or by selling shares at a higher price. Think of it like an auction house where prices are set by the highest bidder willing to buy and the lowest seller willing to sell. When demand for a stock increases, its price rises. Conversely, when supply exceeds demand, the price falls. Another crucial concept is the cycle of bull and bear markets. A bull market signifies a period of rising stock prices and optimism, while a bear market reflects falling prices and caution. These cycles are influenced by economic trends, investor sentiment, and external factors like global events or technological advancements. The terms bull and bear are said to originate from the way these animals attack. Bulls thrust upward, while bears swipe downward. Fast forward to today, and the stock market has undergone a remarkable transformation. Technological innovations have revolutionized trading, making it faster, more efficient, and accessible to anyone with an internet connection. Today's markets process billions of transactions in milliseconds, powered by artificial intelligence and complex algorithms analyzing vast amounts of data in real time. Meanwhile, global markets are more interconnected than ever, allowing investors to trade across borders with unprecedented ease. Online platforms and mobile apps have also democratized investing, opening up opportunities for individuals to participate in ways that were unimaginable just a few decades ago. Modern markets are not only about technology but also about innovation. Exchange-traded funds, ETFs, fractional shares, and automated trading systems have made investing more dynamic and inclusive. Global events and technological advancements continue to shape the landscape, ensuring that the stock market remains an ever-evolving entity. From its humble beginnings in the marketplaces of Europe to the high-tech platforms of today, the stock market has been a driving force behind economic growth and innovation. By understanding its history and fundamentals, you can navigate this dynamic world with confidence and insight. Thank you for joining me on this deep dive into the history and evolution of the stock market. If you found this video insightful, please like, subscribe, and hit the bell icon for more engaging content.